Hey guys, I am Dawn. I'm your life insurance broker. I'm actually heading back home. I came a couple of hours away from my house to work. I found a sweet spot, as we call it. It's an area where I see strong potential to help a group of people, as a not too new but fairly new enough agent. If you really want to help people, you're going to have to go to them. You're not going to be able to sit behind a desk and do a phone call. I'm going to tell you, it's less sophisticated to do it behind a screen, because you got to think about it. This is something that you need to have a trust factor. And as much as people would like to work from home, you need to get out and see the community. You need to demand the earth to be able to know that you are offering such products and that you are available. And like I said in the previous video, unless there's a major pandemic where you shouldn't even be out your house, you need to be out meeting as much people as you can, taking your vitamins, taking your herbs, making sure you sanitize daily, hourly, minutely, and just going out spreading the word. Because let me tell you something, there are a lot of people that are missing out. So I wanted to talk about two of my carriers. I'm not going to call their names out of marketing precautions, but I will do this. If you were to call me, you were to say, you are interested and wanted to do products, I would gladly give you more insight on who they are. I can tell you this, both of them are A+ rated providers. They've been in business over 100 years old. One of them offer dividends, paid up dividends, where you earn on top of your cash value. Another one, you earn cash value. Now, there is no disadvantage in either one of them, because these are both great carriers. One of the carriers, they offer up to $50,000 for a children's policy, and the other one goes up to $75,000 in children's whole life policy. So I ran into someone today, and she works for a carrier that just specializes in term insurance, and the first thing she said is whole life is too expensive. I guess somebody would say that because when you don't know any better, you would say that. But let me tell you what the biggest disadvantage in that is because whole life is usually a little bit more, because some people just wait too long to get insured. That's the whole point of it. Some people wait too long to spend money and put it in their budget to cover themselves. And another thing, we need to stop looking at insurance as just a death benefit. You need to stop looking at insurance as this. People for years have been using insurance to build and to be able to take the money out, use it for other things. People have been using it like a bank account, pretty much as an investment put aside to be able to cover for any expenses that they may need in the future. And a lot of us have been sleeping on this. So when you hear a person say whole life is too expensive, it could be because you just deem certain things to be worth more, spending more money on than others. And that's a normal thing. You do have some people, they will look at insurance as not a necessity, but at the end of the day, this is a tax-free benefit. You will not have to pay any taxes when the beneficiary gets the money. Even when you're pulling the cash value, if you're borrowing against your policy, you're not paying any taxes. It's insane how people really run away from that responsibility of just being able to put their time and dedication and making sure they got that money to the side. Now, let me tell you where the real robbery comes in hand. The real robbery comes in the millions and millions of people that get job insurance, and they don't even keep the same job, not even 5 to 10 years. The real robbery is you're on a job, you're getting a group rate life insurance, which is a term policy. You're getting a certificate, you're not even getting the actual policy, and you're paying into it until eventually either one or two things happen. God forbid, but good, you pass, because at least the death benefit will pay out for what you've been paying, or you leave the company and you're no longer insured, so all your money goes down the drain. There's nothing to borrow off of, there's nothing to pull from. you have built nothing. You have just taken the cheaper route of out of sight, out of mind. You don't think about it. It's getting paid for. The end. Well, let me tell you how you're getting robbed. That same money that you're putting into the company and helping the company to build, you could have been building yourself with your own personal policy that you could have been invested in over the years with all the different jobs you had, as long as you just hold on to the struggle and you keep paying. And some of those policies could have gotten you out of some of the situations that you came across over the years. But because you don't know better, you don't do better. But now I'm here on YouTube to help you know better and do better. Even if you choose to get job insurance, which is a term insurance, because term, you do get more insurance for a smaller rate, you got to think, can this policy go with me? If I leave this company and I get a better opportunity, can this company go with me? No. Now, the other advantage is that you won't have to reapply, or you won't have to reapply with medical information if you leave the job. I think it would be smarter and more economical to your future and your present if you just go ahead and get your own personal policy, you start insuring yourself, and you let Father Time take care of you. Because let me tell you what Father Time is going to do. Father Time is going to get you the existing premium, which you're going to aim, and you should aim for a level premium, which is a premium that do not change over the years. So you get a policy where the premium does not change over the years. That means when you're 60 and 70 and 80 years old, if you've been paying $55 a month then, you're going to be paying $55 a month when you get older. And you're not going to have to do another medical exam. You're not going to have to do another medical questionnaire. And you will have money that you can borrow off of. Now think about the job. The job, you got this big policy. You're paying little or nothing. But what if somebody shady caused you to lose your job? Or you do something stupid to lose your job? Or your company closes down and they just go bankrupt and you don't have insurance anymore. They're not going to promise you that you get to keep that certificate. Also, you're never going to own that insurance because you're going to have a certificate. It's not going to be yours. You're pretty much paying into a pool, and that's what all life insurance is. It's paying into a pool so that you may be able to be a member and get a maximum payout of what you agreed upon during your signing of the contract. So when I think about life insurance and a job, I think about when I was paying $150 a month for $250,000, and when I left that job, I was no longer insured. I had to go through the same medical, well, actually when you do job insurance, you don't have to prove medical. You don't have to do medical for the most part. You're just going to sign on. The product is going to be offered to you. You take advantage of it. And honestly, for $170 a month for $250,000, when I think back, that was a lot. But what they did, they broke the payments down on my checks. That's what I mean by out of sight, out of mind. So I got paid every 2 weeks. So they took that portion out of my check. And by the time I got my check, I didn't even think about what I got paid or what I had. Well, I didn't think about what I had to pay out because it was already taken out. And that's how a lot of people end up having insurance for a long time. And believe it or not, a lot of us are lazy in our minds where we don't want that responsibility. We don't want to say, okay, I know I got to put this to the side every month in order to keep my insurance. It's better for them to draft it out before you even get your policy. But you're actually helping a company get rich. You're helping a company get rich, and God forbid you're no longer there. You have to reapply. And all those years, if you're a good employee and you really believe in stability and job stability and staying, all those years you put it into that policy, you can't pull nothing out. You can't go for no hardship. You can't say, hey, I'm going through a hard time. Can I borrow? Do I have any cash value? I'm moving on to this job. Can I surrender this policy and get the cash? Yes, because whole life policies, they have the advantage of getting cash value and borrowing from the policy. And they also have the advantage of surrendering the policy. Another disadvantage, a lot of people insure their children. They have a rider. But guess what they don't tell you about the rider? If your child dies before you, that policy pays out. You're no longer covered. Or if you die before that child is no longer covered. So all the hard work that you put in paying on that child's policy, it is now gone because you have taken advantage of the death benefit, and that child is going to have to go out there and find insurance on his or her own. Or the remaining parent is going to have to go ahead and find insurance for that child. That rider is cute. But the fact of the matter is, children need their own policy. And the reason why, because they need to learn some type of financial responsibility, and you need to learn how to build a legacy of affordability and financial stability. You can get financial stability by not paying too much into a policy, but being able to gain over the years. To be able to pay $19 a month for a $50,000 whole life policy that will last for that child's entire life, that is the smartest thing a person can do. But to not do it, it's really dumb. And I have to say it. I wish I had somebody to talk to me when my children were young. I had somebody that sold me a policy and was attaching a rider. They didn't tell me the advantage I would have had with putting my children in their own policy. And as much as I saw Gerber, I was not adapted to seeing a bunch of mailers in the mail. I just never been that type of person. I've been attracted to buying something that just constantly came in the mail to me. So I pretty much ignored Gerber. And then I found out that in some cases, some companies were a little bit more expensive than the companies that I offer. So, you know, we need to really get strong on our thought patterns and learn more and get more knowledge and really get involved with our community and take advantage of all these things that are involved for the young people. And that's just it. It's good. If you got job insurance, that's good. That's excellent. You got insurance. You made the first step. At least you cared enough to get insurance. But it's bad that you don't have a policy outside of that, so that as you get older and you need to do something, you need some money, you'll be able to get from the money. You'll be able to take from the policy. That's your policy that you paid into. If you would like to know more about these different types of policies, you can give me a call at 404-645-1922. Be blessed.